Well, let's get back to equities. And for the day's opening calls, James Gerrish from Shore and Partners and author of Market Matters joining us now live. James, I don't know whether you had a chance to listen in to the Reserve Bank governor there, but obviously committed to getting inflation under control, doing what it takes, and hopefully avoiding a recession at the same time. But when we look more broadly, I guess, of how investors are approaching this market, goodness, we saw what happened overnight, particularly in the US. A strong session expected today. Do you feel as though perhaps investors are thinking, well, maybe the worst is past, and central banks do now have a firmer control of what's going on?
Yeah, good morning to you, Andrew. I did listen to the end of the comments there by Dr. Philip Lowe, and obviously he makes some important points around the complexity in the task ahead. It's obviously not an easy balancing act that they're approaching around curbing inflation, but not trying to put a massive cap on growth as well. So certainly a challenge there. I think from a market's point of view, the market really got positioned for a reasonably negative outcome. We're all talking about recessions. You look at the Bank of America survey, and it's people are the most bearish, or investors are the most bearish they've been in terms of risk. So that lends itself to shocks on the other side. And we saw it last night when data is not as negative as the market's positioned for. Then you get really big turns on the other side. So the Dow up 700 points, and we're looking to open up 80 points or thereabouts this morning.
All right. So let's take a look a little more specifically at what's attracting your attention at the moment. Now, we've got Pendal and Perpetual. They're back on the dance floor after about 3 months ago. That $2.4 billion takeover offer from Perpetual was rejected. So what's going on?
Yeah, it's an interesting one. So, Perpetual, as you rightly say, have knocked on the door again. Pendal, in that time, both stocks have fallen since that initial bid came through of $2.4 billion back on the 4th of April. But Pendal has fallen more. They had a big a weak quarterly update, which showed some reasonable outflows across their business, and the stock traded down to new low levels. So that's obviously edged Perpetual off the sidelines and got them interested again. If a deal, this is the second time they've been there. They're obviously under talks. If a deal was to be consummated at the same premium as it was, they spoke about back in April, then that puts Pendal 25% above where it's trading at as of yesterday's close. It was the premium was about 39% back in April. So Pendal did come back and say that wasn't enough. They needed more. So it's 25% is probably our baseline. We've actually recently bought Pendal, which is good for us. Hopefully there's a really positive premium that comes out of this.
All right, moving to the energy and mining space, Paladin, the uranium miner, looking at restarting its Langer Heinrich mine in Namibia.
Yeah, that's right. So they made the announcement yesterday that they were going to restart the Langer Heinrich mine. That's been on the cards for quite a while. They needed favourable pricing in the uranium market to incentivise that. That's happened. That's played out. So tying back in the comments that you were talking about before, just around inflation and what Governor Lowe was saying, they've come out and said that the costs of restarting are going to be higher than what they thought they were going to be 3 months ago. So they were flagging an $87 million restart cost 3 months ago. That's now nearer the 120 mark. There's a few added costs in there, but it does show the price inflation we're seeing particularly in resource projects. So inflation's right across the board. But I think more broadly on Paladin, it's a good update. We expected it. They're fully funded, and now this looks looks to be the start of the next chapter for Paladin.
How's the valuation looking? I notice the share price has come off by more than 25% just over the past 6 months.
Yeah, it has. I mean, the uranium price was very strong 6 months ago. In the last couple of months, it's tracked lower. So spot uranium sort of mid 40s. Here in contract uranium prices are near the mid 50s. But you rightly point out. So energy right across the board probably from the coal market, has come right back. So, crude's down 30% from its highs. It is bouncing now. So it's not just a phenomenon focused on uranium. But again, I think that you got to step back from an investment standpoint and look at the longer, the medium to longer term dynamics. I think there's a big push now, obviously, around carbon footprints and reducing the environmental impact of energy and getting cleaner and greener, etc. So uranium clearly plays into that thematic, and I think that's obviously going to be supportive of the uranium price moving forward, but also those who are nearer production, which is what Paladin is. So they're going to be in production at some stage in calendar year 2024. So, on a global context, they're very close.
And James, just rounding it off with the big miners in iron ore, what are you seeing there at the moment, given the iron ore price continues to fall?
Yeah, it's been pretty weak in recent times. So it's trading around the $100 a ton, 102 a ton. What you tend to see is that sort of that 90 to 100 provides a floor for the iron ore market, simply because there's a lot of production out there that is sitting around that 90 to $100 a ton in terms of production costs. So that often puts a floor in the iron ore price. If you're looking to trade iron ore, then obviously Fortescue is probably the go-to that everyone cites in the Aussie market. But also look at Doterra, which is DRR. They're a royalty stream. They don't have the added impact of rising capex, opex, and all of those complexities that are playing right across the mining spectrum at this stage. So have a look at DRR, and I'd say, whether or not iron ore has found a low, I'm not too sure, but I think around that $90 to $100 a ton represents reasonable value, and it often finds that floor in price at that price level.
Yeah, I'm just looking at Doterra. Has pretty much gone sideways though, so but you're seeing upside there.
Yeah, exactly right. So it's a really pure way of playing the iron ore price without taking away all those complexities and risks of operating a company. So, most people from a volatility point of view, from a trading point of view, will focus on Fortescue. But from an investment standpoint, if you've got a little bit more of a longer time horizon, then Doterra is one to look at as well.